This podcast is produced by the Capabuild Foundation. The views and opinions expressed herein are those of the hosts and their guests and do not necessarily reflect those held by Capabuild.
Global tax rules are designed far from where their impacts are felt the most. My name is Atiya Waris. Join me and my co-presenters as we explore where global tax perspectives meet local realities in the Global South.
Welcome, Liesbeth and Keetie, to our third episode of Tax Voices. Thank you so much for being here with us today. Before we move to the interview itself, I would like you both to introduce yourself and provide some background about your professional life and anything else that may be relevant for this podcast. Keetie, over to you.
Yeah, thank you. My name is Keetie Jakma and I'm working now for PwC based in Amsterdam in the Netherlands. And before I joined PwC, I worked quite some time for the Dutch Ministry of Finance and also for the permanent representation of the Netherlands in the EU, so in Brussels. After the Ministry of Finance, I worked for ING. That's the largest bank in the Netherlands. And then I was asked by PwC to join them and to connect both worlds together. So that's more the policy environment together with the corporate client environments. And that is what I do now. And I really like my job. So connecting both worlds together.
Thank you. Liesbeth, over to you.
Yes, my name is Liesbeth de Groot. I'm also working at PwC in Amsterdam and always worked in the International Corporate Tax Department. And for the last few years, I focus on Pillar 2. So I'm an international tax specialist with a focus on Pillar 2.
Maybe Keetie or one of you explain to the listeners what Pillar 2 is about.
Yeah, I will give it a try, Gitta, because it is a very, very complex piece of legislation and international agreements. But basically, the OECD Pillar 2 framework is meant to design to ensure that large multinationals pay wherever they are located an effective tax rate of minimum 15%. And that means that it is more a framework to avoid profit shifting. So that's the whole basic idea of this Pillar 2 framework.
Thank you. Following on from that, we often hear from governments in developing countries, from tax authorities, that they feel quite pressured to adopt this, as you mentioned, rather complex Pillar 2, whilst it may not be a priority for them. And so they view this as pressured from the outside, whilst their domestic needs it's not such a priority at domestic level, as you both operate in the international tax landscape. What's your experience with this?
Yeah, I think in this international framework, there are a few disadvantages for developing countries. And I think, first of all, it was actually designed within the OECD, the inclusive framework. And there are a lot of developed countries represented in that inclusive framework. So there you see that the decision-taking process and the influence of the Global South countries has not taken quite that time. And they were not just that vocal and their interests are not very important in this framework. So there you can see that there is a disbalance in this super complex piece of legislation and the interests of developing countries. And what is the most important thing? I think the structure of this whole top-up tax to reach that 50% floor is that basically the countries where the headquarters, so the parent entity of these multinationals, is basically the one who can top up the tax. So one solution, then they said, okay, if that's the case, then maybe we should have a solution for that top-up tax. Then introduce a qualified domestic minimum top-up tax. So that means that if a subsidiary is based in another country and not the parent entity country, but in another country, when you have a multinational, they're located everywhere. But that is super difficult because that means that you have to introduce that whole super complex legislation to actually collect that tax. Well, if we take a look at the Global South countries and their tax administration and their whole infrastructure, then you can ask yourself, is it doable for those countries to actually introduce such complex legislation and to collect those taxes in their own country?
Thank you. That's a very comprehensive answer. Indeed, what they say is it should be taxed at source rather than where the head entity is residing. And they see this as an imbalance. And they also feel at times it's not the minimum tax, it has now become the maximum tax. A lot of countries that Capabuild is working with, they say, well, what do we actually gain from this? And what does this tell us about the global tax rules? And you already alluded to it, Keetie. Maybe you can say something more. Is there anything that countries in the global south may actually gain from under Pillar 2? Are there some glimpses of light?
Yeah, I think it's a very difficult and complex question to answer. I think also, we're talking about a tax framework which countries has to implement in their domestic legislations. That's really tax technical, but there is a whole political world behind it. And I think we often forget when we as tax specialists are introducing those taxes and implementing it and have a conversation with the tax administration, that we forget that whole political environment. And I think if we take a look at what the global south countries can win of this whole framework, then I think it is basically in the tax cooperation in that field in the global perspective. They said, okay, this whole decision-taking process and the voice we have as a global south and our own interests has not reflected perfectly in this whole framework. So you can see that the cooperation and to build your own economic bloc with your own interests is something I think the global south has a win. So I think what we can see now in the developments within the UN, there you can see a strong collaboration within these countries. And I think that makes them stronger, that can raise their voice and has a better interest compared to developing countries so that you get a more balanced outcome. I'm not saying that the problems and the whole profit shifting issue is less complex. It's still a super complex problem. But I think that collaboration between like-minded countries is a better countermeasure against this whole framework and to get a better outcome.
Thank you. We know that we have, for example, we see that maybe in developing countries, there's 1, 2, 3, 4, 5 people maybe working in international tax for a large taxpayers unit compared to if you take a large multinational where there may be a team of 30 or 40 just working on international tax aspects. What does this reveal indeed about the gap between what we would say the international rules and then how it works on the ground? I don't know what your experiences have been in this regard in developing countries. It would be great if one of you could share some.
Yeah, so maybe I can briefly share my view here. And I think if I just look at ourselves, so we as PwC in the Netherlands, we see how much work this is to get this all up and running and how we are able to deal with these new set of complex rules. And then because we need to be prepared to assist our clients and to make sure that they are ready to meet all the compliance requirements that are there. So that meant that we needed to invest in people, in technology and design processes. That takes a lot of time and investments from our side as a consulting firm. These are global rules, so we also needed to set up processes, how we work as an international firm together, because we have to rely on work that needs to be done. That's from a consulting side. If you then look at tax authorities, it is similar. They also need to invest in people, in technology, in processes. So if I look at the Dutch tax authorities, who are very advanced, they have a lot of capacity. They also needed to hire people for especially Pillar 2. They are working on designing a platform where we can file returns, etc. And if I then look at what needs to be done in the developing countries, I can imagine that they have lack of resources, lack of money to invest in these technologies.
It would be maybe a little bit more doable if we know exactly the rules, but there are a lot of rules which are not crystal clear.
Yeah.
So the explanation how to apply those rules, it's just, it's sometimes a black box, and especially when countries are implementing it differently. So that is something a little bit more insecure world taxpayers has to face, consultants has to face, and tax authorities has to face. So that is even, something you really have to bear in mind, that it's not crystal clear yet.
Yes, I think that's a very good point, actually, that This lack of certainty and clarity is most certainly present in tax authorities in the global south, but it's not a unique problem for them. It's everywhere the same. How do you see, maybe as a positive or not, when we talk about collaborations, we see it when Capabuild runs workshops and we have experts from, for example, PwC, but that we wish that we could have more open dialogues between governments, business, international organizations, so they can build more capacity for more effective tax systems. Can you explore that a bit further, how you could envisage that working?
Yeah, I think collaboration is key in everything. Build that capacity as well. And I think a fair tax system you cannot build in isolation. You need to do that through collaboration and also through shared learning. So that's my first point. And I think when you create space for open dialogue, officials, they can learn from their peers who face similar difficulties. You can learn from tax authorities that are further ahead. And I don't think it is key that it is about imposing one model that fits, but by exchanging experience, you can see what would work for your own country in this respect. And also collaboration with businesses. If you have public consultations, roundtables, etc., to really understand what the business is facing, then you can also design the rules in a way that you can both benefit so that it is more efficient from both sides. And I think also there's the Amsterdam Dialogue. That's a platform established by the OECD Forum of Taxation
Initiative of the Netherlands.
Yeah. So and there they bring together OECD countries and non-OECD countries to really see how they improve coordination and implementation on the administrative side of Pillar 2 as well. And I'm not sure whether the Global South is included in those dialogues, and they should also have a seat at the table there, because there is shared experience between tax authorities, business are included, and other stakeholders.
But the main idea and main structure that is designed by non-Global South countries. So it is exactly what Liesbeth says. Okay, if we're going to explain the rules, then we should include all countries, because capacity and complex issues are explained differently, are implemented differently.
Thank you. That is a very comprehensive answer. In talking to a number of stakeholders, is that Europe really, or the EU, has gone ahead with Pillar 2 rules and is quite far in the adoption of these rules. And then there are also very powerful countries like India and China. I think India is more explicit in its views that it's not very happy with the Pillar 2 approach. China is sitting on the fence for very understandable and maybe very smart reasons to take a wait-and-see approach. What some have suggested is that what we will see, regional blocks, that Europe is going one way and that maybe the African continent that actually feels it doesn't benefit a lot because it has very few large multinationals residing on its continent, but it's of course the source of a lot of income for multinationals, that it may go a different way. If we look like 15, 20 years ahead, I want to ask two questions. One is, what do you expect to see? Let's pick the year 2050. What do you expect to see and what do you hope to see?
What I think is that, and we can see it already nowadays, is that the Global South and developing countries are collaborating more and have a stronger cooperation also towards international organizations. You see that because of this whole OECD process, they moved to the UN, and especially under the lead of Nigeria, there is now a resolution, Framework and Convention on International Tax Cooperation. And that train has left the station. And it's not often quite in the news, it's more the OECD and Pillar 2. But the UN is getting more importance in this field, in this tax cooperation field. So I think that somehow in the future, the OECD and the UN will align and should align. I think also from another positive note is that although we have discussed the complexity issues within tax authorities in Global South and capacity issues, it is not that they're doing nothing. It is not that they're totally lagging behind. Yeah, we do know they're facing problems, with tax expertise, technology issues like that. But I think that, and that is also we see nowadays, also in our own experience, that some tax authorities in developing countries have an advantage because they have not legacy of all kind of old systems, and they can introduce from scratch. They can introduce all AI tools and really take advantage of the technology developments nowadays. So we do know that there are experiences like in Uganda, the tax authorities have really high-tech systems on certain parts of taxation systems. So I think that if they are taking that position as well.
I fully agree. And I really hope that in the future that these countries will really have a genuine voice and a real seat at the table. And I think that they should engage assertively at those platforms, so OECD and United Nations. On a little bit more negative note, where we see what will happen in 2050, it also depends what will go on politically. I'm afraid that it will be even more fragmented if we go on as what's going on right now.
No, I agree that there will be economic blocks. We will not unite. That will not be the case. So, in this competitive race and trade wars and independency on so many different ways, also from a geopolitical side, I think that taxation will follow and support that development. However, I do believe that there will be economic blocks, but in a balanced way. So not one more equal than others, but equal economic blocks. And I truly believe that the Global South will be and can be an equal bloc towards US or China, India.
It's interesting you mentioned Nigeria, because if we look at the demographics of a country like Nigeria, it will become one of the most powerful economies in 2050. And I don't mean to put you on the spot, but it is a very powerful economy and it is a very powerful country. What is your view on China? Where will it take its stand on international tax if we look 2050 again?
Good and difficult question. I think if we take a look and we go back to Pillar 2, we see that new developments have become because of this side-by-side package where the US has practically negotiated his way out of Pillar 2. And I think that we can expect other countries, for example, China, but also India, Brazil, are taking a look as well at this side-by-side package. I think that from a tax perspective even more, China will definitely invest in his own economy. That means that we do already know that China has a lot of tax incentives to support their own industry, to support the green transitions. That's huge. That's really huge. And I think that will be even more stronger.
Yeah, it's interesting. We started off talking about new coalitions emerging, and we now talk about blocks and maybe the coexistence of similar systems, but not quite the same into the future. Do either of you want to make a final comment, or you feel something you want to raise that has yet to be addressed in this discussion?
No, maybe a last note that I think you should be aware, the audience we're talking to should be aware of their importance of their role. Taxation is not something technical or something in the back door. It's important. It's no longer isolated. It's integrated in everything we do. So that means that your job really counts and it's important. So keep track on the developments and keep track of the world, and your role is important.
I think that's a beautiful note to finish off. Thank you both so much.
Thanks for joining us on this episode of Tax Voices, where global perspectives meet local realities in the Global South, and a fascinating interview there by the chair of the Capabuild Foundation, Dr. Keetie Jakma, who was interviewing Liesbeth and Katie from PwC in the Netherlands. And they covered that really important information about physical presence in negotiations being not enough, but the voice itself being more important, and showed a real awareness of developing country issues and challenges, and shared a bit of a mixed view, both optimism and pessimism, for where tax will be in 2050. But a very rich discussion, which you can find on our next episode of Global Tax Voices, where we will be joined by Nefarida from Indonesia, who's going to be interviewed by our own Atia Waris. So please join us then. And for more information on the Capabuild Foundation, go to www.capabuild.org. www.capabuild, CAPABUILD.org.